Welcome to Bears in Exile. Today is September 2nd, and it is time for the weekend market overview. We'll be looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. And this is a holiday weekend, Labor Day. I hope that everyone has a safe, enjoyable, and restful weekend. I'm certainly going to try and get the restful part, and hopefully the other three will happen as well. But anyways, we had a big, ugly down day today in the market. We were expecting a down move of some type over the last few videos. We've been talking about the short-term moving averages and how they had not completed a complete crossover and separation prior to entering the bar, increasing the chances that there would be a rejection or a very weak penetration of the bearish bar. We did get that. It got turned away. Short-term moving averages are rolling over. We also mentioned that we were on the lookout for the previous resistance line, which would then turn support. We wanted to see if it would bounce off or get through it. We also said that we were looking for the fast and slow stochastic to roll over, go down, meet up with the 14-day RSI moving average, turn around and go up. Well, we have the rollover in the fast and slow stochastic, and very interesting, we have penetration and a close below the resistance turned support. This is very bearish, and it does match up with the stochastics rolling over. Beyond all of that, it is a solid red continuation bar suggesting further movement to the downside. CCI clicking down, stochastics of course clicking down, RSI 14-day moving average clicking up, RSI itself clicking down, MACD rolling over but still bullish, down click on the MACD histogram. Well, what do we need to be looking for further? Well, we were thinking that we would meet 11,400 in the near future. That was greatly surpassed today. And but this close below the support level is definitely very, very bearish. We would therefore be looking at the next line to see if it will stop it. And of course, we have a good ways to go with the stochastics, both of them, as they descend. Now, there is one thing to be concerned about, possibly, which is the 14-day RSI moving average. It does not turn on a dime. It takes a lot to move it. Notice that the RSI itself is clicking down. Now, if it were to go all the way to the bottom, all the way to the bottom, it might have enough impact to cause the 14-day RSI moving average to start to roll over. Now, worst case scenario for the bulls, if this were to roll over and head back down into oversold territory, that would be massively bearish. So hopefully that won't happen. I don't think that it'll take so long for all of this to get all the way to the bottom, and it only takes a few days to get from the top to the bottom. So I don't think that that's enough time for it to really impact the RSI moving average as of yet. But we will be on the lookout for that, and if it starts to turn, we will point it out as a going concern. But for the moment, I'm not worried about it. Looking at the SPX, now this is very different. You have the short-term moving averages rolling over, a bar retest failure, it looks like at this point. They're pointing down. We have a big continuation red candle. But notice it did not close below the prior resistance turned support. It touched it, kissed it, and it bounced off of it. Now, whether or not it's going to be able to hold the decline on Tuesday is anyone's guess. But it is something to be on the lookout for. We said that we had a target of 1180. It was surpassed a little bit today, just over 6 points. And so, that's good. It's nice it's nice that it's doing what it should be doing. CCI clicking down, fast and slow stochastic ticking down as expected. 14-day RSI moving average still ticking up, RSI ticking down, down tick on the histogram, neutral tick on the MACD. So waiting to see this go all the way to the bottom or close to it, turn around, join the 14-day RSI moving average, and go up. Now, at what point is that going to be? Is that going to be at the previous resistance line? I don't know. But that is the next stop if we break through this. Now, if we were to break through this and then break through the other support level, now that'll be really interesting. Then we will be going for the lows made on the 9th, which would be right a hair above the 1100 area. So that is a more than decent move, 70 points roundabout, and we're going to be waiting and watching and playing it. At least I am. But definitely, if it were to get to this point, that will be a major area one way or the other, if it turns around or if it breaks it. Okay, going on to the VIX, we have a hammer, and we have a good little jump today. We said that the short-term moving averages did not look conducive towards putting the hurt on the bar, and true to form, came down, kissed it almost with the moving average, didn't even get penetration, and bounced off of it. This is completely normal, and that's what we were saying we were looking for. So this is nice. Now, this little tiny little hammer, what does that mean? Does that mean it's going to, stop and turn around and all that jazz? Well, at this point, we should either get a complete bounce off of the bullish bar and get separation and expansion popping back up. That would be a guppy entry. However, we have to be aware that it is also possible that it will come down here and turn into a flat line on the short-term moving averages and sit on the bar. Now, I don't expect it just to all of a sudden get all kinds of momentum, go through the bar, collapse it, turn it, all of that stuff. But sitting on the bar or bouncing off of it is what we're looking for right now. Notice uptick on the CCI, uptick on the fast and slow stochastic, downtick on the 14-day RSI moving average. Now, if this were to pop up and everything, I mean, that's totally normal. We want the stochastics to run up here, join the RSI moving average, turn around, and go down with it. That's what we want, and that will take a few days if it does this move correctly. RSI ticking up, getting above the 50, downtick on the histogram, and a slight uptick on the MACD histogram. So this does look good. It does look good. Going on to XOI, oil. Oil is bearish. The market is bearish. We had a nice big solid red candle. Looks like a bar test failure, but notice it is not as developed as the Dow and the SPX. Downtick on CCI, histograms, uptick on the RSI moving average, downtick on the RSI, downtick on the histogram, side tick on the MACD. This is doing what it should be doing. TNA, our least favorite, recent least favorite symbol. Certainly looks like a bar retest failure. Notice it did not even get as close to the bar as the Dow and the SPX. And we had mentioned that this sucker has been lagging. This thing has been a disappointment, and which is a bad sign because normally it leads. So it is getting close to the major price consensus level. If it breaks through that, which it most likely will on Tuesday, that's a bad sign. Bad sign. Downtick on the CCI, downtick on the stochastics. They are farther down than the down the SPX, uptick on the 14-day RSI moving average. Notice it is not as high as the Dow and the SPX. Downtick on the RSI, downtick on the histogram, side tick on the MACD. Does not look good. But hopefully it'll be good for us at the pump, because the stinking gasoline prices are $3.63, and there is no reason for it. It is a rip-off. Continuing on to our, not our second VIX, UUP, the dollar. Nice big move up again, decent move up I should say, spinning top. Notice we are not quite at complete crossover. It is getting some separation, but it is also above the upper Bollinger Band. So we don't have complete crossover and separation, although we are getting some separation, and we're almost completely finished with a crossover. So it is a bit late. That does decrease the chances of this emerging from the other side. Certainly being above the Bollinger Band also decreases the chances. We were above it yesterday as well and continued to push up. One thing it does have going in its favor is the middle Bollinger Band line is below the short-term moving averages, which should help give it some strength. Downtick on the CCI, uptick on both the stochastics, uptick on the 14-day RSI moving average, uptick on the RSI, uptick on the histogram, uptick on the MACD histogram, the MACD and the MACD histogram. So certainly this does look rather bullish, although it does have the bar to contend with, and it has the Bollinger Band to contend with, but it does look bullish based upon the secondaries. Although the stochastic is getting pretty high, once it gets to the top, it should not be there for too long, maybe just a couple of days. So it does have some things to deal with, but we will be watching, and that's about all that we can do. FXE, the euro, nice, completely inverse of UUP, which we like to see. Spinning top below the lower Bollinger Band. We almost have complete crossover. We are getting separation of the short-term moving averages. Middle Bollinger Band above the short-term moving averages. There is not much of a bar to contend with. Uptick on the CCI, downticks on the stochastics, the 14-day RSI moving average, the RSI, the MACD histogram. So yes, this does look bearish, and it certainly looks more bearish in that it does not have much of a bar to deal with. There's not much force to pull it back. So not too shabby. GLD, our second VIX, look at that. Boom. Huge gap. It looks like it wants to test the previous highs. Certainly if the market continues down, that will be entirely possible. It has some room between it and the upper Bollinger Band. It is close to the upper price consensus level. Notice we have so much room between the short-term moving averages and the bullish bar. The middle Bollinger Band is still in the middle, but we have uptick on the CCI, the stochastics. Actually, the fast stochastic got a little bit of a downtick. 14-day RSI moving average is ticking down slightly. Uptick on the RSI, uptick on the MACD, uptick on the histogram. So while we have a little bit of a mixed bag in the secondaries, we always have to remember that this is our second VIX, which is when there is fear, when there is indecision, when there is potential problems, it should be going up. And certainly it is doing so. Today was a nasty day with 0 jobs created in August, and that is well reflected here. So very nice, and I don't see a reason for this to turn down, besides possibly a try to fill some of the gap. But we have so many gaps. Actually, a lot of these are already filled, but most of them. But still, if you're into gap theory, perhaps it'll test some of it, but if the news continues to be bad, up it goes. So those people saying $2,000 for gold, hey, maybe they weren't so off base. SLV, nice gap. It is breaking away, and the short-term moving averages are expanding. Middle Bollinger Band right in the middle of the short-term moving averages. Uptick on CCI, the slow stochastic, the fast stochastic, the 14-day RSI moving average, the RSI, the MACD histogram, and the MACD. So not bad. Is it going to go way up here to the previous highs? I don't know. That's a long ways away. But still, it does look bullish. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.